Hey, Saretsky here. As always, Canadian real estate market update with a particular focus on Vancouver. If you get sort of value or entertainment out of these videos, all I ask you a thumbs up and subscribe. Questions, comments, put those below. I figured I'd do an update on the Vancouver housing market for some of you original subscribers that came here 5-6 years ago just for the Vancouver content. Obviously, we expanded outside of that, but we'll do a deep dive on the Vancouver housing market here today. Obviously, covering the most recent data, which came out for the month of March. So we're here in early April. As you guys have been following along here, the biggest move that I want to sort of frame this Vancouver update on is really the move in mortgage rates, right? So, 4 to 6 weeks ago, where you're looking at your typical 5-year fixed rate mortgage at about 3%. Today, that's about 4%. So, 100 basis point move in the mortgage market in, 6 weeks is a monster move. It's actually the quickest pace of increases in the bond yield market that we've seen, I think, since 1980. So, just to give you some context, right? So the MLS benchmark price of a home in Greater Vancouver. So if you basically take the entire sort of Greater Vancouver submarkets, and then you take all property types, it spits out what is considered like a typical home in Greater Vancouver. I know it's not like necessarily, the perfect sort of figure, but basically what it is today is that benchmark price for Greater Vancouver sits at 1.360. So the typical home costs about 1.36 million in Greater Vancouver. If you take and say, if you use that number and say, okay, let's do an 20% down on a $1.36 million purchase. And what's the mortgage payment on that? So at 3% mortgage, your monthly payment would be $5,150 a month, $5,150 a month, assuming a 25-year amortized mortgage. Today, with a 4% mortgage, you're looking at $5,725. So that's an increase of $575 on your monthly mortgage, going from 3% rates to 4% rates. And so that's really why we're starting to see this shift in the Vancouver housing market. Not only have we had, 2 years of record home sales, which has pulled a lot of demand forward, but now you've got some exhaustion setting in as we sort of reopen from this pandemic. And now you've got obviously rising mortgage rates, which are all working to dampen demand. And so you're starting to see is less competition in the housing market subtly. And the reason why I say subtly is I want to get into, first and foremost is the detached housing market in Greater Vancouver, because that's really where all the excess has been. That's where most of the price growth has been, is in particularly in that detached segment, particularly in the suburban market. So we're starting to see fewer bidding wars, but you're still seeing a lot of bidding wars. And the reason for that is you have to understand is that there's still no inventory in the market today. New listings in March, we had sales down 34%. I mean, that's, oh, wow, sales are really falling off in the detached segment. But, new listings were down 30. So you had new listings off a huge 30%. And this leaves your months of inventory, which is really the best sort of metric to use when looking at a housing market. If you just want to take a quick snapshot of the overview of the market, all you have to do is look at the months of inventory for sale, and that basically will tell you the balance, the conditions of the market. So as of right now, your detached houses, you're sitting at 2.4 months of inventory on the market. And you have to get that number north of 4 to basically get into sort of more of a balanced market condition. So you're at 2.4, you still got extremely low inventory levels. People don't just cut their prices right away just because mortgage rates are rising. I mean, it's still, the market conditions still favor the seller. And so that's really underpinning the market. That's why you still have homes going multiple offers, but instead of, 8, 9, or 10 offers on a house, now you only get 1, 2, maybe 3, and buyers, because there's, we've lost the sense of urgency. There's no more we don't have that FOMO anymore. Okay. There's no more fear of missing out. It's people are more calculated in what they're going to offer. And they just go, you know what? The mentality now is if I don't get this house, I'll kind of wait until I get the next one. But I still think that we are seeing somewhat of a rush, not a rush into the market, but you have to understand is that people are looking forward right now and saying, okay, mortgage rates are, the new mortgage rate's 4%. I've got a rate hold with my mortgage broker at 3.2. It's only good for another 60 days. I got to make a purchase and close on it in the next 60 days. So either I get aggressive in my home search and bid on a property and maybe not get the best price, but I'm locking in at 3.2%. And when I run my numbers, unless this house comes down, 5 to 10%, that 4% mortgage is not going to make my housing any more affordable. So that's kind of the context that home buyers are running through their heads right now. And so I think in terms of the mortgage rates filtering through to the housing market, that's going to take some time. You have to understand most buyers that are actively searching the market today are not at 4% rates. They're still at the 3.2s, 3.3s, 3.4s. And so that hasn't necessarily filtered through into the entire housing market. You still obviously have variable rate mortgages extremely low. But switching gears, touching on those who are looking in the condo market, if you've been reading any of my Saretsky reports, which I publish for free every single month, they take me 4 or 5 hours to write them, so please enjoy. But I've been writing about the condo market in Vancouver, saying that it would outperform every other segment in the market this year. And that's really what we're seeing. Is if you look at the sales to active ratio in the condo market, it's now at 72%. That's the highest it's been since the 2017 bull market. So that's first and foremost. You got months of inventory crashing down to 1.4. That's worse conditions than the detached segment. So the condo market is actually where we're seeing the acceleration. You're seeing the detached housing market decelerate, and you're seeing acceleration in the condo market. And then we now have condo prices up 17% year over year and rising. Because again, my view is that mortgage rates eventually are going to filter through this market, and they'll probably slow all the market. But as of right now, so long as you have extremely low inventory, condo months of inventory at 1.4, who's cutting their price? If there's no inventory to bid on, I don't care if the buyer demand starts to taper off, which it is. You got no inventory, it's going to be a competitive market. So that's kind of the biggest takeaway from the housing market. We're starting to basically see, if I can summarize this entire video for you, is things are cooling. It's been a fairly drastic change since January, February, which, as I talked about in numerous videos, that was the blow off top. Okay, that was the peak blow off top. People were throwing crazy numbers out there. There's a fear of missing out. There's a sense of urgency that has shifted drastically in the last 4 to 8 weeks. And we're now in a situation where, yes, demand is slowing, rates are rising, but there's still not much inventory. And so that's keeping prices very firm. And that's really where the market's at today. Again, it's going to take some time to build inventory levels after 2 years of having the cupboards picked dry. It's going to take time to build that inventory. And as that inventory builds, I think that buyers will slowly start to gain some more ground, be able to negotiate a little bit more aggressively, et cetera, et cetera, et cetera. But we're not there yet. But the key thing here is to watch mortgage rates. The other thing I'll quickly touch on as I'm filming this video, there is expected to be an announcement from the federal government tomorrow announcing the ban on foreign buyers across Canada. So there's going to be a 2-year temporary freeze on foreign nationals from purchasing real estate. The ironic thing about that is it's coming in at a time when the market, as we just talked about, is cooling. Mortgage rates have moved to 4% for the first time since early 2010 or 2011, 2012. And this policy, ironically, is going to play well into public sentiment. It's going to... People are going to look at it and say a year from now and say, hey, look, the housing market corrected, 5 or 10%. See, I told you it was that foreign buyers tax. That's all you had to do. But it was actually, in my opinion, it's mortgage rates. Mortgage rates are doing the work for the politicians, but the politicians will probably reap the benefits of this policy. So I guess well-timed, if you're a liberal supporter, it's a well-timed policy. It feeds well into the liberal government. But in terms of its actual impact on the market, I don't think it's going to do anything. If you look at BC's got a 20% foreign buyer tax, 20%. Foreign buyers haven't been here like they have been since 2016. In fact, if you look at the BC government's own property transfer tax data, which collects the number of foreign ownerships accounted for less than 2% of total transactions in all of British Columbia last year. So The problem is that, yes, we definitely have foreign capital in the housing market, but they are ultimately Canadian citizens and permanent residents. So the tax, which targets your nationality or your passport, is kind of designed to be rather insignificant. So take that as you will. That could ultimately, maybe it plays a little bit into sentiment to cool things a little bit further. But I think longer term, I mean, if you look at it, again, we've got a 20% foreign buyer tax here in BC. And last time I checked, we had the fastest pace of home price acceleration ever over the past 2 years. We've seen home prices in the suburbs double over the past 3 years. I don't think it's the foreigners pushing up Chilliwack condos, but who am I to judge? Hope this video helped. We'll do these regular updates on Vancouver housing market moving forward this month, and see you next month.